Hello and welcome to the look ahead for Thursday, the 4th of April, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, kicking off tomorrow, we will have the Eurozone Services and Composite PMI data. We've also got the ECB minutes to be released. UK services and composite PMI, as well as the US trade balance, and then several Fed speakers. So just as far as the Eurozone services and composite PMI is concerned, the services PMI is expected to tick higher in March to that 51.1 level, up from 50.2. Now, this data comes after we saw manufacturing PMI data earlier this week actually show that the downturn in the manufacturing sector in the Eurozone deepened in March. So there's very much sort of a split in that the economy, some divergence going on between those different sectors. The service sector is showing signs of recovery. And we also know from inflation data today that the service sector inflation in the Eurozone is actually proving to be quite sticky as well. It's still up at 4%, whilst inflation for the region actually cooled to 2.4% more than expected. So, that the ECB are likely to be keeping an eye on that service sector inflation. Now, as I mentioned, we also have the minutes from the ECB meeting, which will be released. They come from the meeting where ECB President Christine Lagarde almost signaled that June could be the month where the central bank starts to cut interest rates. So I think the markets are going to be looking for, further signs on confirmation that June is going to be the date. I think, we've seen that cooling of inflation, depending very much on the tone of the minutes. We've also heard from commentary from ECB speakers who have also suggested that June could be the month as well. Now, what does all this mean for the euro US dollar? So we actually have seen the euro US dollar has been trending lower across most of March, in fact, hitting a low of 107.25 in the beginning of April, but we have seen it rebound. Now, it rebounded yesterday and today. Today, this is very much a US weakness story as well, after we had slightly weaker than expected US services PMI, which just has supported the view that Federal Reserve could cut interest rates sooner rather than later, but we'll come to that shortly. But this is also, again, following that inflation data, which was little, as I said, mixed signals because of that sticky service sector component. So we've seen the rebound of the euro US dollar off that 107.25 level. It's moved above the 108, and it's just testing the 200 SMA. That's the next level for it to rise above, which is at 108.35. Now, if we can get a rise above that, then we'll be looking to test 108.60, which was last week's high. And then above that, then we'll be looking towards the 109 round number and 109.85, which was the March high. On the downside, failure to rise above that 200 SMA could see the 108 level retested, and below there, then we've got that strong support at the 107.25. So as well as the ECB minutes and the Eurozone data coming in, we've also got figures, as I mentioned, from the UK services and composite PMI. UK services PMI is expected to remain relatively strong. It's supposed to confirm the preliminary reading of 53.4. That's just down slightly from 53.8 in February, but still a reasonably strong number given the situation that the UK economy is in. We've also seen the manufacturing PMI data from the UK was stronger than expected. So that's, again, some encouraging signs. What we're seeing, though, is we've also sort of suggestions that the Bank of England could start to cut interest rates earlier than that sort of August date, which had been planned in. There's now a 50-50 expectation that the central bank could cut rates as soon as June. Now, if we get stronger than expected data, that's obviously going to cause the market to just push back on those rate cut expectations. Weaker than expected data could see them brought forward, especially because, again, in the UK service sector, inflation is a point of concern. Now, I think it's really interesting just to take a moment to take a look at the FTSE. Now, the FTSE's had a really, really strong rise recently. I mean, has been very much a laggard amongst its European peers, but it did rise above the 8,000 level on Tuesday to a high of 8,017. Not quite the all-time high. The all-time high was in February last year, which was 8,045, but it's definitely making its way up there. Now, there are a couple of factors that are supporting the FTSE at the moment. So not only have we got that weaker pound on expectations that the Bank of England may actually start to cut interest rates earlier, but we're also seeing strong performance of commodities after we've seen sort of, solid data or encouraging data from China. Manufacturing sector was stronger than expected. The PMI data, services also stronger than expected. So although there is still these problems within the real estate area of the economy, which is a very important part of the economy, we are seeing some encouraging signs of recovery in other parts of the economy, such as the services and the manufacturing. And that's lifting commodity prices. We've seen oil prices on the rise. We've seen metal prices, coppers on the rise, for example, helping the miners on the FTSE. And also just pro-cyclical stocks seem to be outperforming. Now, we did have the drop off today in the FTSE. It has fallen away from that above the 8,000 level down to now. If we just have a look at this chart here, it tested that support level at the 78.90 level, which was the January 2023 high. Now it's bounced back off of that support. We've seen the long lower wick there, which suggests that selling demand at those lower levels wasn't actually that strong. So that is sort of still encouraging. It's brought the RSI out of overbought territory or on the brink of overbought territory. So, I mean, I think this uptrend is still intact. Buyers are going to be looking for a move back over 7,900 to get back towards the 8,000 and aim for the 8,045 and fresh all-time highs. As far as support is concerned, so, if we get, for example, a stronger than expected services PMI, that might strengthen the pound, and that could have a negative effect on the FTSE. Then we could see support tested around that 78.90 level, and below that, then I'd be looking at the 7,800. And just finally, we've also mentioned that we're going to have, there's the US trade balance and also Fed speakers. I mean, this week is a big week as far as Fed speakers are concerned. And they're just giving us a little bit more insight into when the Fed may be looking to start cutting interest rates, and also the scale of those interest rate cuts, because the market is pricing in 3 interest rate cuts. The Fed has said that they will cut interest rates 3 times this year. That's what Fed Chair Jerome Powell said at the latest meeting. And, well, I think there are some doubts, or there had been some doubts, given that strong data that we've had from the US this week. We had stronger than expected manufacturing, ISM manufacturing. We had stronger than expected factory orders. JOLTS job openings were also stronger than expected, and ADP payrolls. But we did have some weaker services numbers, and that seems to have just really fed the market the data that it wanted, just to really pull back, sort of bring forward again those rate cut expectations. Also, we've had a couple of Fed speakers this week who have also already said that 3 rate cuts this year is still a good baseline. So what the market will be looking for is confirmation of that from these Fed speakers that we've got tomorrow. Is it three rate cuts we're looking for? If we're still getting the cues that it's 3 rate cuts, then I think we can still see the market, stock market power higher. It's going to put pressure on yields and also on the US dollar. And this is gold chart that we're looking at here now. Now, weaker yields, weaker dollar has been helping gold rise to fresh record highs. It's hitting the fourth straight day of record highs as it heads towards that 2,300 level. Not only is it being supported by optimism surrounding rate cut bets, but also we've got safe haven flows as well, as there are concerns about sort of escalation of tensions in the Middle East. We've also got central banks buying up more gold, and also the threat of inflation remaining sticky, which is also gold is a hedge against inflation as well. So, lots of reasons to be getting behind the precious metal, which has been driving it towards those record highs. As I said, 2,300 is the target on the upside, not that far from there right now. On the downside, as far as support is concerned, because do be aware that gold is very much in overbought territory. So we could really have a period of consolidation now or a move lower. As far as support is concerned, be looking at 2,222. That was the March 21 high. That was also our previous all-time high. If we get a break below there, then I think there's also support around the 21.95 level, which was also a previous all-time high for gold as well. There'll be levels that I'll be watching out for. So I hope you liked what you've seen. If you do, then please remember to give this video a like and do subscribe if you would like to receive more videos like this.